Good morning and welcome to the Killik & Co podcast. This week we've had GDP numbers from the UK, and this is our preferred measure of economic growth. And over the last quarter, the UK economy grew at 0.3%. That was very much in line with expectations, but it is a fairly low number, and it does highlight that we can expect fairly low levels of economic growth while we negotiate Brexit. We can break down this GDP number into its constituent parts, and we can have a look at which areas of production are rising and falling. So have a look at this chart here. This shows that construction and manufacturing were relatively weak over the quarter, but we did have quite a strong quarter for retail and also a standout quarter for UK film. So over the last 3 years, since 2014, the rise in UK film activity has been 72%, and that's because there have been some favourable tax breaks that have been introduced into the industry. So over the last quarter, we've had Wonder Woman, Pirates of the Caribbean and Beauty and the Beast, all of which were partially made in the UK and all of which were in cinemas over the second quarter. So that's contributed to an improvement in GDP over the second quarter for this year. If you have a look at this chart here, you can see how UK GDP growth over the last 12 months compares to other major economies. So for the UK, the number is 1.7%, and that's very much on a par with other major European economies such as Germany. The US is growing at 2.1%, so slightly higher than the UK, and then emerging economies such as India and China are growing at over 6% a year. So that's why emerging markets are considered to be an attractive area to invest at the moment. We had a decision from the US Federal Reserve this week not to raise interest rates for this month. Low interest rates do tend to be good for markets, so following that news we did see further rises in US indices. And here you can see that the S&P 500 did go on to a new record high after that news. If we look at the minutes from the Federal Reserve meeting, they do contain some slightly negative comments about inflation, and that has led people to think that the chances of a further US rate rise this year are now lower than they were previously. So before this week's meeting, it was thought that there was a 46% chance of another US rate rise this year, and that percentage has now fallen to 42%. Looking at individual sectors, there's been quite a lot of news for the UK car industry this week. So first of all, we had some negative growth numbers. Production of UK cars has actually fallen by 13.7% over the last 12 months. And I think that's partly because exporters are concerned about whether or not they'll be able to export cars as easily from the UK once we've left the European Union. On a separate note, we've had an announcement from the UK government saying that from 2040, sales of brand new petrol and diesel cars will be banned. So I think this shows that over the next 20 years, the rise of electric vehicles will be much higher than previously thought. And the Killik estimate is that by 2030, about 25% of new car sales will be electric. So we've been looking at the components and commodities that could be affected by this rise in electric cars. And we think that there will be quite a significant rise in demand for copper because electric cars do use significantly more copper than petrol or diesel vehicles. Looking forward to the week ahead, it is still the second quarter reporting season, so we do have lots of companies coming out with results. In the UK, we have results from HSBC and BP, and looking overseas, we have results from Apple and also Deutsche Telekom. That's it from us. Have a good weekend, and we'll see you next Friday.